Let's consider the proposed example as we think about building a company's income statement. For revenue, we recognize the revenue of the products sold in the month of November, not the cash we receive. So $1,000 worth of coffee and $2,000 worth of toffee would be our revenue for the month. For cost of goods sold, we recognize the cost of all products sold during that month. The coffee should be straightforward as we have costs of $500. For the toffee, however, given that we only used half of the ingredients in November, we only recognize half of the cost of the toffee sold in this month. The other half is saved for next month and will be expensed when the product is sold then. So $500 coffee COGS plus $500 divided by 2, or $250 of toffee COGS, giving us a total COGS of $750. As we discussed earlier, gross profit is simply revenue less COGS. For SG&A, we consider employee salaries, advertising expense, rent expense. So we have a $500 cashier salary plus a $250 rent expense plus a $100 advertising. Then we have a research and development expense, which is simply our cost of research and development. $250. And then we calculate operating income as gross profit less SG&A less R&D, and as we discussed, if there happened to be any, which there are not in this case, other operating expenses. So we have an operating income here of $1,150.